All right, let's discuss this with Daniel McClory. He is the Managing Director and Head of Equity Capital Markets and the Head of China at Boustead Securities. Good to have you with us, Dan.
Thanks, Michelle.
All right, let's talk about what we're seeing out of China. It's starting to keep up its end of the Phase 1 trade deal, as we said, cutting tariffs on $75 billion worth of U.S. goods. All very well and good. But now with the coronavirus outbreak, what does that mean in terms of a potential delay for the U.S. reaping the benefits of that deal?
Well, first of all, I think it was very instructive that they honored their commitment to actually roll back those tariffs. They could have pled extenuating circumstances. They could have said we're in a state of an emergency practically, and certainly not been over-criticized for doing that. So I think part of the market reaction you saw today was the tremendous good faith that was exhibited by China.
All right, but because it has these measures in place to tackle the coronavirus outbreak, like quarantines, like certain shipments being halted, what does it mean in terms of what it agreed to do in terms of purchases? It agreed to $200 billion worth of extra purchases from the U.S. Is there going to be some kind of delay in the U.S. bearing the rewards of the Phase 1 deal?
There certainly will. I think Larry Kudlow even said, be prepared for a little bit of a delay. The Agriculture Secretary was on record today talking about delayed purchases of agricultural products as well, and to kind of get the market a little bit sensitized to bear with China as this unfolds. And if you can't allow ships to enter ports, and if you can't unload those ships, and if you can't truck things around the country, it's just impossible to keep up. So there will definitely be a delay.
Is this perhaps an opportunity, because China is so vulnerable right now, to really enforce Phase 1 and perhaps even start putting out some of the parameters for Phase 2? Perhaps take advantage of this vulnerability that China faces right now. It's a mercenary approach, but it's nothing that we wouldn't expect from the president.
I really don't think he's going to react that way. I think he's going to be a bit more measured and a bit more pragmatic, and he's not going to kick someone when they're down, literally. I think he will definitely keep the timetable in place for the Phase 2, but I don't think he's going to try to pull that ahead and take advantage of the weakness of a particular moment.
But what about making sure that the enforcement mechanisms are upheld right now? Do you think that there'll be a tremendous amount of pressure for China to adhere to that?
Absolutely. But remember, all of the trade wars, all of the tariffs, all of this back and forth, to me, is really just disguising the main issues. State subsidies for state-owned companies, intellectual property theft, forced technology conversion. So all of those things that's really the heart of the matter. And yes, the tariffs and the barriers, et cetera, are very important, living up to that part of the bargain. But it was all created, in my mind, so that President Trump could really make progress on all the rest of the issues.
Sure, and those issues are arguably what is most damaging to the U.S. economy in the long term. According to Robert Lighthizer, that's what costs the U.S. $500 billion a year in terms of losses with the intellectual property violations. Phase 1 did start to address that, though. There were some provisions regarding intellectual property there. How far do you think it went?
Not far enough.
Yeah.
We've certainly seen it in financial services. So the opening up of financial services is an area that had long been promised by China, which is actually happening. So they're allowing foreign banks, foreign investment funds to find their way into China and have majority-controlled enterprises instead of minority enterprises, which was always the case in the past. But intellectual property, remember, this is a longer, slower slog. It's not an overnight thing. It first comes with the mindset that we really have to get serious about this and do something, which I think President Trump has done a great job of getting their attention.
Right.
But now it's about implementation.
There was also language in the Phase 1 trade deal that dealt with the forced data transfers, that companies will no longer require other companies to transfer their data. There hasn't been a legal change, but that language was included in the Phase 1 deal. How significant do you think that is?
I think it's very significant as long as it is lived up to.
Yeah.
So, words and, sometimes we joke and we say in China an agreement is just a pause between negotiations, right? So you sign an agreement, but it's constantly being negotiated or renegotiated. I think it was a definite step in the right direction. They were differentiating between government enterprises and private enterprises, and that's a little bit of precision that was in the fine-tuning of the details. But I think it's super important.
Dan, this all comes against the backdrop of China, of course, trying to shift its economy to a consumer-driven one, away from a manufacturing-driven one. And as it's doing this, hit with this coronavirus outbreak. What impact is that having on consumer confidence and therefore on the economy at large?
A lot. It's interesting. It's kind of the inversion of what we used to say. We used to say, if the U.S. sneezes, China gets a cold. Well,
Yeah.
it's kind of the opposite now. It will definitely have an effect on us. But in China specifically, as you're pointing out, consumption and services have surpassed manufacturing, but they've got to keep chugging along and keep growing. There is a real cutback on consumption of all forms, and we're seeing it now in the Chinese New Year period, which is historically one of the highest consumption periods, whether it's restaurants or going out to the movies, anything like that. All of that's been cut back. I mean, the streets are empty, the restaurants are empty, the theaters are empty. So you're really seeing that. And then if you want to lay on things like luxury goods, obviously travel.
Right.
I mean, those are big drivers of consumer spending, and all of them are suspended.
Dan, there are some forecasts for at least a 1.5 point drop in China GDP. Does that sound about right?
That's been predicted for the first quarter. So
Yeah.
that's actually a 25% reduction from 6% to 4.5. So yes, I could definitely see that happening.
Now, of course, China arguably is more important to the global supply chain now than it was back in 2003 during the SARS virus outbreak. What does this mean for the global supply chain?
Well, back then, as you're pointing out, China was 6th or 7th in terms of world economy, especially in purchasing power parity. Now it's strong number 2, if not a number 1 in purchasing power parity. So it has a major effect, a major effect. Some of those global supply chains were already shifting elsewhere because of the trade tensions, so that's already been kind of factored in or priced in. But it is a completely different set of circumstances today. And I think the most ironic part is all of the actions that China is taking are not for the eradication of the virus, is for it not to spread.
Right.
So, the people are being dealt with, and they're, being nursed back to normal health. And yes, people are dying. But all of this is about containment. And the containment has a huge price.
Dan, as the head of China for Boustead, what impact are you seeing this having on your business?
Well, we're in the initial public offering business. We underwrite IPOs. We've seen deals delayed. We've seen deals pulled. We've seen deals repriced. We've seen some deals on indefinite hold. We have a Chinese company that operates movie theaters. Guess what? One of the first things China did, nobody's going to a movie theater. You're not going to sit with 200 people in the dark coughing and sneezing for 2 hours. We're not going to allow that to happen.
Right.
So you can just tear up Q1 for that particular company, and the IPO will come back some down the line.
And of course, no plans to travel to China whilst this is ongoing.
I've canceled 2 trips now. I was supposed to go this weekend. That's out of the question. And even my March trip is now in question. So.
All right, so Dan, with all of this impact, are you surprised at what we're seeing from U.S. equity markets? Because there was a dip initially, and now all of those losses have been recouped. New record highs today. What do you make of that?
Well, if you look historically at various health crises that have come up, whether it's Zika or SARS or swine fever, things like that, there's been a relatively quick recovery. This is an almost instantaneous recovery. I mean, from a period of days to a period of other days for the market to hit all-time record highs. I think, as you talked about at the beginning, the fact that China is living up to the reduction in tariffs was seen as a huge relief. The last thing markets wanted was another protracted trade war over just the phase 1 portion of it. So when they saw that, they said, this is really something that we can take heart in, we can take a good sign of confidence from.
All right, Dan, thank you for joining us tonight. Dan McClory, good to have you in our new studio.